$3 trillion giants, 3 earnings reports, 1 nervous stock market. This week, Microsoft, Meta, and Amazon are about to tell the world exactly how much money they made. And honestly, the answer could shake the entire market. Here's why this week feels different. Just days ago, Alphabet, Google's parent company, reported its own results, and the market didn't like what it saw. The reaction to Alphabet's results significantly raised the bar for its peers reporting this week, and Alphabet's free cash flow moved into negative territory for the first time in its public life, mainly because it's spending so much money building AI infrastructure. So now, every investor on Wall Street is asking the same nervous question: are Microsoft, Meta, and Amazon about to do the same thing? And it's not happening in a vacuum. This is one of the busiest weeks of the entire year for the stock market. More than 800 companies are reporting results, including a huge chunk of the S&P 500. On top of that, the Federal Reserve is making a major interest rate decision, and new inflation data is coming out at the same time. So investors aren't just watching earnings, they're watching earnings, interest rates, and inflation, all colliding in the same 72 hours. That's a lot of pressure packed into 1 week. Let's start with Microsoft, because it kicks things off first. Microsoft reports on Wednesday, July 29th. Analysts are looking for earnings per share between $4.22 and $4.24, with revenue projected between $87.5 billion and $87.67 billion. Now, here's the thing. Those numbers almost don't matter as much as one single word: Azure. Azure is Microsoft's cloud business, and it's become the heartbeat of the entire company. Management guided for 39 to 40% growth in Azure, and investors are expecting at least a 36% bogey to be cleared. If Azure comes in strong, Microsoft could be rewarded. But if it slows down even slightly, even with great headline earnings, the stock could fall. Why does that matter so much? Because Microsoft's stock trades with an average analyst price target of about $552, which would represent roughly 41% upside from where it's been trading. That's a huge gap between where Wall Street thinks the stock should be and where it actually sits right now. That gap tells you something. Investors are nervous, and they need proof, not promises. On top of that, some longer-term forecasts put Microsoft near $615 by the end of this year. And some analysts, like those at Morgan Stanley, have pushed their targets even higher, towards $650, calling Microsoft a top pick for enterprise AI adoption. So ask yourself, would you rather back a company that spends confidently on the future or one that plays it safe? Because right now, Microsoft is spending big, really big, and the market wants to see that spending finally turn into real revenue, not just big dreams about the future of AI. Now let's talk about Meta. Meta also reports Wednesday, and this one is interesting because Meta has one of the best track records on Wall Street. The company has beaten analyst revenue estimates for 15 straight quarters, and beaten earnings estimates for 13 straight quarters. That's an incredible streak. Analysts expect Meta to report around $60.22 billion in revenue this quarter, with earnings per share near $7.14, compared to $47.52 billion a year ago. That's massive growth in advertising. But here's the catch. Just like Microsoft, Meta is spending enormous amounts of money on AI. And after Alphabet's rough reaction, every single dollar Meta spends is going to be examined under a microscope. Here's something wild. Analysts have set a price target for Meta of around $825, with some of the most bullish forecasts going as high as $1,015. That would represent a huge jump from where the stock sits today. So the real question for Meta this week isn't did they make money? Of course they did. The real question is, does Wall Street believe their AI bets are finally starting to pay off? Or will investors start to worry the same way they did with Google? Now let's move to Amazon, reporting Thursday, July 30th. Amazon is a fascinating case because it's really three companies in one. The online store you know, the advertising business quietly making billions, and AWS, its cloud computing arm, which many people consider the true engine of Amazon's profits. Amazon's Q2 results are expected to show earnings per share around $1.85. But what really matters is AWS. AWS's future revenue commitments alone totaled $200 billion as of last September. That's an almost unbelievable number. It shows just how much businesses are relying on Amazon's cloud to power their own AI tools. And when it comes to price targets, Amazon's average analyst price target sits around $296, implying nearly 28% upside from current levels, with some of the boldest analysts like Wedbush predicting the stock could reach $340 by year-end. Part of that optimism comes from Amazon's growing partnership with AI companies, which analysts say strengthens its cloud strategy for years to come. So here's the part that really matters to you. Whether you're watching this because you're already invested, or you're just trying to understand where the market is headed, this week isn't really about whether these companies made money. They almost always do. It's about trust. It's about whether investors believe that all this AI spending, the data centers, the chips, the electricity, the infrastructure, is actually going to turn into real profit down the road, or whether it's just really expensive optimism. Think about it like this. Imagine you loan a friend a huge amount of money because they say they're building something incredible. For a while, you believe them, but at some point, you want to see results, not just excitement. That's exactly where Wall Street is right now with big tech. They've believed the AI story for a while, now they want proof. So will these stocks go up or down after earnings? Honestly, nobody can promise you that. Not me, not any analyst, not anyone. But here's what we do know. If Azure growth stays strong, if Meta's ad business keeps crushing expectations, and if AWS keeps showing that AI demand is real and growing, these stocks have real room to climb toward those year-end targets we just talked about. But if capital spending keeps rising faster than revenue, we could see the same nervous reaction that hit Alphabet just days ago. And in a market this sensitive, even a small disappointment can trigger a much bigger sell-off than usual. This is genuinely one of the most important weeks of the year for the stock market. Hundreds of billions of dollars in market value could shift in just a few days. And whether you're an investor, someone thinking about investing, or just someone curious about how the world's biggest companies operate, this week will tell us a lot about where the AI boom is really heading, and whether it can keep justifying its own price tag. So here's my question for you. Do you think this AI spending spree is going to pay off big? Or do you think we're heading toward a reality check? Let me know what you think. And hey, if this kind of breakdown helps you understand the market a little better, do me a favor. Hit that like button and subscribe to the channel so you don't miss what happens when these numbers actually come out. Because trust me, by the end of this week, we're going to know a whole lot more.